Welcome back to my channel, guys. Thank you so much for joining me today. And today I have a great video because I'm going to be sharing some secrets on my worst mistakes I've done when investing in the stock market. So if you're just starting and investing into the stock market, this is a great video to watch because it's going to pretty much tell you all the mistakes I've made, and it's hopefully going to help you gain more confidence when trading in the stock market. Now, if you haven't already, I would please ask you to hit that like button and subscribe so you never miss any sort of content from myself. And if you have already subscribed to my channel, thank you so much for watching. I really appreciate your view, and let's go ahead and get started. Today, I'll share 4 things that I've personally learned when investing in the stock market that have proven to not work. So make sure you make a note, you highlight that do not do these things no matter what, but I'm sure we will all fall prey to these things because they're just common actions. You know, it's human nature to do these things. But let me just tell you this, I have literally lost thousands of dollars in pretty much these mistakes. So this short video could actually save you thousands of dollars, hopefully. So be sure to be paying close attention to the details. Mistake number 1, paying brokerage fees. Now, let me just make this clear. You should not be paying any sort of brokerage fee. But even though some brokerage firms, which most of them already don't charge any fees, they do charge fees for specific stocks. So for example, Robinhood and Webull don't accept trades on over-the-counter stocks. However, Fidelity and Ally do, or other brokerages, I'm sure they do, but the ones I've used, which is Fidelity and Ally, they do. Ally, on the other hand, when I trade an over-the-counter stock, they charge me a $50 fee. And I did not notice this once, and I just traded the stock assuming it was commission-free, you know, don't have to worry about the fees, not to soon realize that I already had a $50 loss straight off the bat. Not to mention that you also will get charged once you sell the stock as well. So technically it's not $50, it's actually $100 that I'm going to be paying for that specific trade. So when trading, make sure that you always look into the confirmation, make sure that the commission is 0, and make sure to be familiar with the types of fees that your brokerage could charge you, so that if you happen to be in that situation where you want to invest in over-the-counter stock, you could probably look into a different brokerage firm, or if anything, just invest sufficient money where the $50 is not really relevant and you will just make that money easily back up. Mistake number 2, and that is a very simple mistake, but it's putting 90% of your money into one single stock. While this may make you a lot more money much faster, you will also lose your money a lot faster as well. Just remember that the higher the return, the higher the risk. And I did this mistake big time because I would often kind of get, you know, impatient, and I would just be like, you know what, I really feel like Tesla's gonna go up because it's the S&P inclusion, and I'm just gonna put all of my money in Tesla. And if Tesla suddenly dips for whatever reason, I'm losing a significant amount of money, and that makes me feel more pressured, which triggers me to potentially panic sell, which making my loss an actual reality. So I've actually bought stuff, I panic sell, and I lose money, and that's a no-no, big no-no, and just don't do it. Don't put your money in over, I would say probably stick to 5 to 10% max of your total portfolio. That's probably just already too much weight, but never go above those rates. Mistake number 3 is trading with gut feeling, and we all have this gut feeling or intuition, right? Or we, like I said previously, I feel like Tesla's gonna go up because it's being included in the S&P 500. But there might be a lot of things that you're not taking into account that might actually be the opposite. Perhaps Tesla's financials are not so good. And again, this is not the case, but I'm just giving you an example, right? But perhaps Tesla's in trouble and, you know, the company's not gonna perform well. Well, you want to do your due diligence, and especially if you're going to be investing some hefty amount of money, you want to make sure that you've at least seen the financial statements, you've seen if there's any sort of insider trading, you want to see, you know, what's a PE ratio, you know, little basic things that you want to look into before just kind of going into a stock with your gut. Now, if you're not familiar with any sort of terms or financial literacy, it's okay. And if you want to trust in your intuition, that's also fine. As long as you could ask yourself, do I see this company 10 years from now? And so, for example, if I see Apple, well, okay, do I see Apple still within 10 years from now? It is almost likely that Apple will still be there, maybe not as dominant as it is now, but maybe they might still be there. So again, Apple would be a good company to invest in if you're just going to follow your intuition. So again, but if you've never heard about this company selling, some sort of circuit breakers, and you're going to put money in there, I would probably suggest you stay away from those stocks and never trade with your gut. Also, investing with gut feeling tends to be more short-term trading, which means you might actually miss the days that the stock market actually bumps up. So, just in other words, I would recommend stick to longer term trading, and try to have some sort of factual basis that you can rely on for each purchase you do. And finally, the last mistake I've done, which is mistake number 4, is having a long-term strategy but acting as a short-term strategy. So for example, I've been prey to this a lot of times where I'll say, you know what, I'm buying this company and I'm gonna hold it for 5 years. I don't care what happens to the stock. I'm gonna be buying it at an average and I'm just gonna hold it. And 2 weeks from now, there's some news that I didn't like and I'm like, sell everything, sell, and I'm selling at a loss. So it kind of defeats the purpose of, your whole analysis. I would say you just have to trust your strategy. If you did your due diligence, if you were carefully analyzing the stock, if you believe in this company, just stick with it regardless of the news, regardless of what the media is saying. Just stay with the stock and act long term. Do not sell. And if the stock goes down, find the money to just enter probably the position a little bit more and then just ride the wave. It's gonna go up and it's gonna go down, but I can guarantee you that the longer you wait, the easier it becomes actually. So the hardest part is in the beginning because you're either gaining or you're losing. But as you wait longer, you'll actually start accruing gains, and later it won't be a matter of earning or losing. It will actually be a matter of winning more or winning less. So it becomes less emotional and painful to watch your hard-earned money just disappear. So my strategy, and the one I recommend to you guys, I know there's a lot of people out there that like investing in ETFs, but I personally like making my own ETF, investing in 30 to 40 different companies. And this is simply why. Because when I invest in one single company or less than 10 companies, I'm more aware of what's going on to each one of these companies. Meaning that if some bad news happens to this company, I might be more prone to panic selling. However, when I have 30 to 40 or 50 different stocks that I made a good analysis, that I know they're going to be giving me a return within a long term, then I cannot keep up with all these stocks in a daily basis. So overall, I'll just be looking for my top gainers and top losers, which means I will probably not be panic selling, because if I'll see, whoa, this stock lost, $100 today, and I'll be like, whoa, but this other stock made me $100 today. Well, as long as I'm kind of staying around, the same amount I invested, we're all good. Probably shouldn't be touching my portfolio. So I would encourage you guys to probably test that out now with Robinhood and Webull and Fidelity, allowing fractional share trading. I would encourage you to probably test this strategy out if you're having issues with panic selling. And if not, hopefully all these tips helped you out to kind of prevent you from losing money and avoiding mistakes when trading in the stock market. Now, I do hope you guys enjoyed this video. I do have a Fidelity account series where I pretty much invest $1,000 every month. I allocate it into 40 different companies, and I explain to you guys 3 times a week pretty much what I'm buying, what I'm selling, and my strategy, so you could kind of come along and pretty much see the progress and the growth we've seen and we've accomplished. So I invite you to do that. I also invite you to click that like button and subscribe. And thank you so much, guys, for watching. I'll see you guys next time.